Let's talk about refinancing a mortgage. Let's talk about rate and term refinancing a mortgage and what that means and what it is. So a rate and term refi is a, air quotes, normal mortgage. Those are my bunny ears. I love using them. And the reason why I say normal is because compliance won't let me, because there's no such thing as normal. But the reality is a typical normal cash out is going to have the whole purpose is to either save money or lower the monthly payment. It's whether it's creating cash flow with that monthly payment or to save money on interest or maybe mortgage insurance or some of that nature. Those are typically the two primary reasons why somebody's going to do a normal cash out. The reason why I say normal, there are other cash outs. You can do a home equity loan, like cash out. You can do home improvement loans. Those are different. Those are not, quote, normal refinances. Those are refinances with a purpose. The purpose is either take cash out or do home improvement, or, there's all kinds of ways, reverse mortgages. There's other things. But just in general, and somebody says, hey, I'm going to do a refinance. They're typically, if they don't designate, if they don't say, hey, I'm doing a cash out or a home equity loan, or I'm going to do a home improvement loan, or I'm going to go get a reverse mortgage, refinance typically means rate and term. Why? Because you're going to change your rate, your interest rate, or it can be both. You're going to change your loan term, right? So it's one of those two. You're changing the rate or you're changing the term or both, right? So let's talk about that real quick. So understand there's a big distinction between saving money and lowering your monthly payment. So there's we'll put a link in here. There's a right way to do these for when it makes sense and when you should pull the trigger and make this happen. There's a link. You absolutely need to watch it. If you're thinking about doing it, the Mortgage Mark team fundamentally believes there's a different way of doing it than what a lot of folks think. It's not just saying, now I'm going to save $300 a month. That's not saving money. So here's why. Saving money means you're going to pay, and this seems so simple, and I know you'll get it. Saving money means you pay less interest or maybe mortgage insurance, because they're same but different, but you're going to save money over time. Duh. Right? But the reason why it's not necessarily the difference in monthly payment, because somebody can go from a monthly payment of, I'm going to make up a number, $3,000 a month, and they could refinance and pay $3,000 a month on their new mortgage and still save money. And you think, how and why? Well, if their old mortgage was a 30-year loan at $3,000 a month, and they're now refinancing into a 20-year note, because maybe they only had that last mortgage for 3-4 years. Now they're refinancing into a 20-year note, keeping the payment the same, or maybe it's a 17-year note or a 15-year note. It's whatever years it makes sense. But even though the mortgage payment's the same, they're still going to save a ton of money in interest by shortening the term. Remember, rate and term. So the term gets shortened. Therefore, even if their rates, or pardon me, their payments the exact same, they're still saving a lot of money. And you can even argue if they refinance into a rate that's higher than current rate, but they shorten the term, the math will show they will still save money long term. So that's why it's a rate and term. You're either going to lower I'd say lower, but you're going to change your rate and or your term of your mortgage. So again, the whole purpose of that is to save money. Whether it's removing MI or lowering your MI, whether it's reducing your rate or just lowering your term, all obvious reasons why you'd save money. Let's talk cash flow. The other reason, to create cash flow. So you may say, man, I would love to save some money, but at the end of the day, if I can create some cash flow in my life, that'd be great. A few extra bucks because maybe the spouse has stopped working, because maybe they're taking care of a kid, or maybe a job change where commissions aren't quite there, or the economy's bad and the commissions and bonuses aren't there, or just need a few extra cash per month. So when you do that, you may reset the clock to 30 years. You may not save as much on interest, but if it can create an extra $300, $500, $700 of cash flow each month, again, the savings, that doesn't necessarily translate to direct savings. You can't just say I'm saving $500 a month, $6,000 a year, and that's my savings. No, that's your cash flow, and that's okay. Cash flow is important. So again, just understand there is a difference, and maybe you can get both. Maybe you get cash flow and you get savings. That's the goal and dream. But at the end of the day, just understand there's a difference. That's what a normal, air quote, normal rate and term refinance is. I'm sure we got links somewhere down around for cash out, home equity loans, right? And there's probably something down there around there as well for home improvement loans. So just reverse mortgages. If you have other needs, those are need-based refinances. Check those out and reach out to us. So no matter what your questions are, the Mortgage Mark team is here to help. As always, we'd encourage you to let us know if you need anything. And when you think mortgage, think Mark.